Okay, here we go. Last topic. Listen, this guy, okay? This is Klarna's CEO, Sebastian. I can't do this. Anybody? With the high kick?
Not me.
No. What is that? Is that yoga? What is that?
I think that's yoga coupled with Pilates.
I think that's
like
yoga.
Photoshop.
That's yoga. It's photoshopped. Yeah, that's good. All right, here we go. 1, 2. Hey, everybody. Welcome to This Week in Pre-IPO Stocks podcast. With me, I got Nick Fusco, CEO, 8View, a pre-IPO secondary market pricing company, Don Nitti, venture partner at Social Leverage, a venture capital fund, and Clint Sorenson, chief investment officer of WellShield, an OCIO, an investment research business. All right, we got 3 topics queued up for today. We got Discord buys gas app, challenger banks, and FDIC national average interest rates. And last up, we got Klarna and its U.S. revenue milestones. All right, boys, I'm going to kick us off here with the first, let's see here, the first deal. Okay. Are we seeing this? Good. All right, so Discord buys gas. So, Nick, you were telling us before the show started you know what gas is, so hit us with it, man. Yeah. I never heard of it until I read this.
All right. So certainly had no idea what gas was. It took someone on my staff that's 15 years my junior to explain it to me. But effectively, it's a way to boost some egos, gas up your friends, maybe anonymously, or give them clues to figure out who you are. But definitely kind of the nicer, kinder side of social. Something that we probably need in this world. But the big news is the Discord acquisition of gas. So right. Really interesting to see the change of Discord's tack. I mean, a lot of us know them for a lot of what they're doing in the gaming space and so on in terms of messaging. But this is a whole different ball game, and probably getting them to go a little bit earlier in terms of their demographic for age. So really interesting. I love it.
Yeah, I mean, I would buy it. You could pay $6. Say this thing. I read about this, right? They have this thing called God mode, right? So after someone says something nice about you, you pay your $7 a month, and you get like hints on who it is. So yep. I didn't know that Clint said something nice to me. I got a hint that it might be him, right? So like, I'll pay $7 for that all day long. Right. But,
what are the competitors in this market? Like, what are the competitors?
Oh, okay. Listen to this. So these same there's 4 people that built this thing. Okay. And they just sold it to Discord. They didn't announce the valuation, but the same 4 people built literally the same thing. It was called TBH, Clint, and sold it to Meta in 2017 for $100 million.
And what did Meta do with it? Just kill it?
Shut it down.
Yeah. So they just started it over again.
You got it.
Nice.
It's wild, man. Rinse, repeat, right? So, okay. So listen. So Nick was nice enough to send over some charts here, right? So Discord's down 56% from last year. They had a $15 billion valuation in the last primary capital raise, which was in September of 21. And based off of Nick's data and looking back at that primary round for the respective time period, I put them at $7 billion, right, for valuation now. So I tell you what, Don, like, I'm interested. What are you seeing? Like, these pre-IPO companies are so big now, they're like buying other companies, right? They're huge. These guys are huge. So I've seen some other acquisitions out there. I mean, do you think that this stuff is going to continue to happen or like accelerate where these big pre-IPO companies are making acquisitions?
Well, I think 2 things to it. One, these are public companies that just don't trade on the NASDAQ, right? I mean, just look at valuations. The majority of these businesses, for years, it was just stay private because you could do whatever you want with the valuation. And if you missed the liquidity window, you missed it and you're kind of, stuck in the land of misfit toys. It comes down for a lot of these companies as well. It's a buy versus build. And I think one of the big things behind this is that as prices come down, albeit gas is, what was it, a 5-month-old business, but it's not prices coming down, it's multiples coming down. So you're getting multiple contraction across the board from public to private markets. So if you're a company like Discord and you think about what happened with gas, I've never used the app, as Nick had to get his tutorial from someone 15 years junior, I'm not the end customer of this, but, if you think about that business and think about, they got $7 million in revenue in 5 months and they're at 1 million DAUs. It was all organic traffic. So what would Discord have to spend on customer acquisition to gain that, right? So if you're C-suite at Discord and you could say, hey guys, guess what? This thing would have traded at a 15x multiple 12 months ago, and we could buy it, if you gave it on revenue, if you give it a 7x multiple, it's a $49 million valuation. At 5x, it's 35 million. Let's say they paid somewhere in between and it was, half cash, half stock deal. You're probably going to spend more, over the course time with a, kind of wonky, unclear payback period on that customer. So I think you're going to see a lot of it. We constantly have conversation, and the other thing too is even in the public markets, it's not hard to see what Tom Bravo's doing, right? They've been licking their chops waiting for some of these software valuations to come down, and now just doing PE buyouts in a lot of software companies. So
right.
I think M&A at the end of the year is going to be pretty hot.
So Clint, what do you think? What do you think of that? What Don said about these companies being private, but they're effectively grow. I guess they would be large cap growth companies if they were publicly traded.
Large cap growth. Some in the mid cap space, depending on where you mark your values. But yeah, these are big companies, right? Especially if you look at all the larger pre-IPO equities. How many of them would be in the S&P 500 or would have been, prior to a lot of these down rounds? So, they're big companies, and at the end of the day, like in this particular instance, they're able to capitalize on, as Don mentioned, this drop in multiples, right? They're able to capitalize on it. They're big enough to go do it. And think about what it does for the network effect moat, right? All Discord's doing is building a network, and that network effect is going to provide a competitive advantage to it. And this is a great way to get 1 million users, right? Through a reasonable acquisition. If the company's willing to sell, I think it's a great play. It's probably a great play for both parties.
Yeah. You guys use Discord?
I have a little bit. I guess, Nick, do you guys have data on the cap table of gas? I haven't done any work on, were they funded or is this thing bootstrapped?
I think we're seeing the same thing as Aaron saw. We see a couple people that were the previous sellers of over to Meta back in, was it 2017 or 2019? I'm forgetting. So that's what we've seen, but I don't have a full cap table stack. But I think just to hit on the last comment from Clint, you're almost able to buy your growth here, right? So my last company before they went public, they did 100 acquisitions between them and their merged party in a 10-year time horizon, which was outrageous because we had incredible organic growth. But just like a public company, they said, you know what, let's acquire some growth as well. And this is a perfect strategy to get after that, right? Plus building that moat out, plus attacking a slightly different demographic than they already have. It's brilliant.
It is. All right, so let's transition to the next one here. Okay? So I don't know if you know this about me, but I obsess over bank account interest rates. All right, so the FDIC, they just started doing this 10 years ago.
And how much they're taking from
you're the points guy of the regional bank.
Yeah. No, listen. So the FDIC comes out with the national average rates. Nobody knows about that. I think it's great. So I look at this. They come out with it once a month. So naturally, here, let me see. Hold on, I got the numbers here. Naturally, it's horrible. Okay, and where is this? Here.
Aaron's calling Clint saying we could arb 4 basis points between 2 regional banks on interest rates.
Yeah, so check it out. So these are the rates right now. The Fed funds rate's the effective Fed funds rate's 4.5%. So the rates are really bad across the board, right? But some of these fintechs are delivering good rates, and there's a lot of other banks too, Goldman.
And that's still a good spread. If you think about it, that's still a good spread at 390. Because what's that for? 390 for what? What's the term?
That's a savings account interest rate. So that's annualized. Is that?
If you think about it, you got a 6-month CD at was it 156, right?
Yeah.
If you look at a 6-month treasury, you can get those for 4.8.
Yep.
I mean, that's a lot of spread. I wish I was a bank at this moment. Or
Well, bank financials are going to be great. They haven't been hot this earnings season so far.
But deposits are dropping. If you look at a lot of the because of this phenomenon, right? There's more optionality. There's more substitutes. People trust online now. So e-commerce is here. So people are like, I can go on this bank and get 4%. Why am I going to sit here and get 1%?
Yes.
So you're seeing deposits drop. I think a lot of brokerages are capitalizing on this too, in terms of saying, "Hey, I got treasuries or brokered CDs." So yeah.
So
but here's what I want to know: do people really migrate from bank to bank? I've sat with Bank of America for a long time, which I'm not terribly thrilled with, and I know I'm not getting the best rate. But the amount of lift it's going to take to move everything across to Chime or someone else. I actually, funnily enough, was using Revolut all last weekend, going between currencies because I knew that was cheap. But to lift out my entirety and deal with my brokerage account, my savings account, checking accounts, many credit cards, that's brutal. So I don't know. I'm just opposite of Aaron. I don't care if it's 1% or 3%. It's kind of staying put. Yeah, I hope they don't read hearing to this, but I'm probably not going anytime soon.
It's a headache cost, right?
It's brutal.
Yeah, it's bad. It's bad at transition.
And that's why I think they have to be so aggressive here. That's why the delta between a traditional bank and a Chime or Revolut is going to be so big, right? Yeah.
Well, listen, I think to Clint's point, though, it does work because yours truly has like a substantial position in SoFi stock, so I follow what they're doing. They're like up north of 4%. Their CFO last earnings report, they haven't done earnings this quarter, but they say we're pulling in $100 million a week in new deposits, right? So there's definitely like some portion of Nick. I don't know if they're moving their whole banking relationship, but I would assume people are opening up a new account and just moving cash over there.
It's the same guy or girl getting a salary bump because they're jumping between jobs. They're getting paid more. It's new income. It's not necessarily new client acquisition.
Right.
How much gain percentage wise is First Republic getting? How much gain percentage wise are some of the others getting?
Yeah, fair.
I'm gonna battle the other side of that.
All right. So
I talked to a family office today, which was really interesting. And this was like and I was with an advisor, and this was the whole topic was what they were earning on their cash and like how much they could drop that deposit and keep their lending relationship. That's like what we talked for 30 minutes about because they wanted to move. Now they wanted to move to treasuries. They weren't, going to Chime, but they were saying, hey, I want to move and get a higher yield on this. Why am I just sitting here holding this in a bank that's paying me 1%?
Exactly. So Clint, to your point, like if you're sitting at Bank of America like me, I just go to my investment account. I ship the money over there, and I invest in treasuries. That's why I think. I mean, the old standbys are doing just fine.
Yeah, I agree with that. I think if you're to Nick's point, Bank of America, Merrill Lynch, there's so much optionality. Like if I went to Revolut, like they're not going to give me an LMA against my brokerage. And even, in 2020, my LMA was like 75 basis points. So if I could go out and return 10%, 15% in the market, borrow money from the LMA, arb the spread, pay them back, I made 9%. Like it's just so hard. I think with a lot of these companies like Chime and Revolut and Pedal, which is more, credit card, but you think about it and you think about the customer, that cohort is way, way younger than the traditional bank, right? So if I'm JP Morgan or Bank of America, I'm looking at these guys as, how are we going to acquire these customers if we do need them? How do we offer them services? And now back to the point that we made before, valuation compression and multiples coming down, is this the time that the banks start making acquisitions on some of these companies where before they were, trading through the roof at 35 times as a fintech company? Now it's like, hey, guess what? If you need money, you're going to do a down round. We'll acquire you at this price. And then, the big bulge bracket guys just become more powerful.
Yeah, Don, I've been hearing from my crew in this space, this like fintech challenger bank space, that these folks are like falling like flies. Like not the big ones, right? These big ones are holding on, but like a lot of the ones that have just started, like funding's dried up. They're not bringing in any customers. I mean, the revenue model's light as it is because most of them don't have any fees. They just make money off of interchange, right?
Yeah.
So, I mean, are you seeing some of that? I know you guys dabble in fintech, right?
I mean, yeah, but we've my partners traditionally kind of like steered away from a lot of neobanking businesses, for his own reasons. But I mean, we haven't really spent much time there, just given that we never really paid that much attention to it. Mm-hmm. But I could just the later stage growth guys, like there is zero appetite for anyone going in and writing checks into those businesses.
Got it.
I like the idea of the buy versus build here, though, for traditional banking.
Yeah, why wouldn't you?
I mean, it's just such an easy, pickup.
Yeah, these guys have a ton of clients too. I mean, like Revolut has 25 million customers. Chime has 14.6 million customers. Right? I mean, this is like that's a lot. That's a lot.
That's what I would get after, right? Because I mean, if you really think about it, they're undercutting for a lot of services. So the reason why I was on Revolut, I had to transfer between dollars, euros, and francs, right? And that was a fun weekend.
Wait, hold on, Nick.
It was super cheap.
Nick, excuse me. Why were you having to transfer between currencies, Nick?
Because I had to skip your podcast, and we did a 3-night boys trip to St. Anton, flying through Zurich to get there, right? So when you land, you're getting your francs, and Revolut is super cheap to get that done. Same thing when you're transferring over to euros, and then you've got the credit card in your pocket with the Apple Pay. So it's absolutely brilliant. But Clint, if you're looking at it, I like the customer acquisition strategy. I think that's perfect, just like Discord. But then wouldn't I want to shut that business down because the amount that the banks are taking on an international transfer is just outrageous? Because that's what I used to pay. So I spent half my career sitting abroad.
Move it down.
And it was horrible, right? So
you make the offer less attractive, and you try to upsell and get wallet share, right? The good old banking term. Try to get as many products from the customer as possible.
Yeah. No,
I just think that if I'm a corp dev guy at a bank right now, I'm licking my chops. I mean, I see it given what we do in fintech, and I'm just like, how do these guys not acquire this business? Especially if you look under the hood of a lot of these companies, like it's almost going to force management into a sale on some of them. Right.
And I don't know if Aaron, you did it on purpose, but I almost have the same comment here. I forget, Don kind of leaned. The demographic on the neobank will be different than the older brick and mortar banks that have kind of geared up. And the whole name of the game is get them hooked early, right? It's like Camel cigarettes back in the day. Get the younger client in. Maybe bad analogy there, but I think
Aaron smokes Lucky Strikes.
There was a time, boys. There was a time for sure. Definitely. Okay, here we go. Last topic. Listen, this guy. Okay, this is Klarna's CEO, Sebastian. I can't do this. Anybody with the leg kick?
Not me.
No. What is that? Is that yoga? What is that?
I think that's yoga coupled with Pilates.
I think that's
like
yoga.
Photoshop.
That's yoga. It's photoshopped. That's good. That's good. All right, listen, Klarna's gotten crushed, right? But I want to talk buy now, pay later. This guy just made an announcement. I want to talk about Klarna's got crushed. I mean, just crushed. So down 83%. $6.7 billion valuation in July of 22, right? And then they had to go. So they had to go to market. I think they just expanded internationally too fast. They had to go to market to raise capital, and they just got smoked right this summer. But they've actually come back a little bit, right? So they're up 13% since they did the capital raise, right? Which is a surprise, right? Based off of that secondary market pricing data from Nick, But here it is. So they just announced that they are doing more revenue now in the United States than in any other country. It was Germany before, now it's the U.S. So here it is. So like Clint, what do you think about buy now, pay later, right? And do you think it's better than a credit card?
I hate these businesses. I really do. But at the end of the day, I feel like all you've done is digitize layaway, and I don't understand why we needed the service. Maybe it was the customer experience. Obviously, the customer experience, there was a need there. At least we created a temporary artificial need to convince a lot of customers to do business. but I don't understand the sustainability of it. So I'm generally bearish on this and probably wrong. Obviously, I'm wrong on the valuations up until 2022. But I would love to hear from you guys on it because it's just, I can't get my head around it.
So to play devil's advocate.
We call it buy now, pay never, by the way.
But to play devil's advocate on it, right? I mean, the interest rate's significant. It's like a term loan. As long as you pay on time, it's like a term loan. So it's a much lower interest rate than a credit card.
Agree.
Right? So to play the other side, there is some positivity. It's just you got to make sure you pay it back on
You're
time.
providing financing for people who shouldn't have financing.
Well, that's what credit card companies do too.
Exactly.
Right?
True.
So
at least they gouge them. Yeah.
I'm real curious. I don't know the answer.
Yeah, but you're gonna be more cognizant of spending with the credit card at a 26-point vig. I mean, with lower rates, people were like, and it's been embedded on every single cart checkout, right, between Affirm and Klarna and whoever else is out there. So, you get on, you're like, it just enables the consumer essentially to overspend. Credit card, you still need to go in, put in your number, this, that, the whole. I mean, obviously a lot of it's saved now in cart checkout, but like the one-click solution to be like, hey, here's an upsell. Why don't you spend a little more? I don't know.
Can you do both, Don? Can you actually use Klarna on a credit card?
Yes,
or does it have to be a debit card?
Yeah,
so
you can.
I don't think we're talking about people like us that are going to see that as an opportunity and lever up, right? But you can. But I'm willing to bet a lot of the Klarna activity would be through credit card if you can do it. Think about that. Not only am I putting my credit card down, but then I'm stalling my payments on that. That's pretty clever.
Well, they don't report.
horrible.
Go ahead, Clint. Go ahead.
No. What's the default rate on these type of businesses? Like, what's the average default from a consumer? What's the average delinquency? Like, I just haven't seen enough data.
Yeah, I mean, I don't know the exact numbers, but I do know the interest rate can vary on a whole bunch of factors. But they have it's like alternative lending, right? So they base the interest rate off of other factors outside of like a FICO score, as an example, right? But I think there's a place for it. But you got to be responsible. The thing that kind of makes me a little weary, they don't report to the credit rating agencies, and then when they do extend credit, they don't consider any other credit. They don't put like a credit report for folks to see what other outstanding lines are. So I think that's been from what I've read, that's been the issue that a lot of people have with these buy now pay later, is because someone can have 5 maxed out credit cards, be late on their rent, and they're ripping purchases off with Klarna, right? And just just digging themselves into deeper and deeper hole, and they're kind of like lender of last resort to buy stuff that has no asset value to it.
I mean, as a Q4, Affirm in their quarterly had 13.9 million active customers.
Versus what prior? Do you have a sense?
I mean, they grew in Q3. Yeah, year over year, it was 96% growth.
Yeah.
So
there's a
they went
great
from 7.1 to 13.9. I mean,
Right.
this guy Sebastian, like this must have been 6 months ago. I'll see if I can find it. I'll send it to you guys. But he did like a tweet thread on how they make revenue. And to Nick's point, like they actually do a lot of their transactions are actually debit card transactions. Right? It's like what Don said. It's just easier than having to go and put in all my stuff. I can just hit the one button. It's like an Amazon buy now, like an instant buy kind of thing. It's the same kind of idea. So it's the buy now, pay later stuff is certainly a part of their business, but it seems like it's more robust. I guess my question.
So their delinquency rate, sorry to jump in.
Yeah,
they have the
good.
delinquency rate in a firm's earnings. I mean, it's for 3. I mean, it's right around like a little over 2%. That came down. July was actually like 3%.
I feel like that's pretty good. Yeah.
Yeah, that's low.
Yeah. No,
I would have thought it's higher.
So I don't love the business because that's not an area that I play. But to be honest, if you were to pull up that stock chart again, Aaron, you can just see the precipitous fall. And what I feel would happen, I mean, this would happen maybe. You three want to comment on this? If you're at an asset manager and you have the ability to write something down pretty hard, you might as well go full bore and write it down real hard and then you get some of that recovery that we've already seen, the 13% plus uptick. I think they had this opportunity to take a down round and took it pretty seriously. Some of those down rounds are taking some alternative debt on the side and interesting structures. But I think the hickey they took was so damn hard. I bet they're going to do really, really well in 2023 if you bought 2 months ago, a month ago, or yesterday.
Listen, so what I'm hearing, let me ask you this. I'm hearing.
What was the valuation on Klarna?
It's there, 7.7. I have it at 7.6 billion.
What was it
today.
previously?
And the round, I think, was 6.7. Is that right?
The prior round was
down round,
6.7. Yeah, that was down, and that was down. I think
firm's
from like 40.
So
Yeah. So I mean, it's not pretty for these guys, but I mean, I'm hearing to Nick's point though. That's what I'm hearing about a lot of these firms, because a whole bunch of them came down. I could pull it up, but like Checkout.com just did a huge like 409A like down. Instacart
just did a
that.
409A down.
Yeah, like there's a lot of folks that are either doing a 409A down or they're doing a prior round down.
You're doing that to keep employees though.
Yeah, you're right. But don't you? I'm like, okay. So, but Don, don't you think that's going to impact if they're going to go public? I mean, that's like out in the universe now. Those valuations, right? So, if you can you go to market at that number, or you have to kind of think about what your investors were in at that last round?
I mean, I think that ship has long sailed. It's just take your medicine at that point. We're never going to say. I mean, I don't want to say never because anything could happen, but anyone who's under the pretense that we are going to trade at the multiples we traded in 2021's peak, right. You need to just go to a mental health facility.
Could not have said that better.
Yeah. But I mean, it begs the question, like things get better this year, touch wood, right? I mean, who goes public? Like in the pre-IPO space. And I would think that it's these companies that have kind of already reset in a public way. They can go to market now at like an evaluation that people will consume and be comfortable with it, right?
Yeah.
Where are the big asset managers who have written it down at Nick's point, right? I mean, who's going to be applying pressure to liquidate?
Yeah.
Well, the other thing too is, I mean, traditionally you had the 6-month lockup, right, on an IPO. You've seen over the past few years, that restriction get moved or lifted or whatnot. So I guess the other question is to get a lot of these companies public, do some of the bigger asset managers step in and say, hey, you're going to do a $400 million IPO. We're going to support you with $200 million, but we need $100 million to be fully liquid day one, right? Or, it kind of put all these different check boxes in place in order to get these companies out. It's going to be pretty interesting, but the bat is definitely in the investor's hand at this point on dictating those terms and not the company.
Right. It's going to be interesting to see what happens and who comes to market, right? Or if they'll keep tapping that the venture capital firms or kind of these crossover hybrid firms that are coming in from the hedge fund space, right? Later this year. But good. What else, boys? Anything else on your minds for the week?
No, just Netflix had, I haven't gone through the numbers yet, but it was up about 7% after earnings. Maybe
there's been some good ones. Morgan Stanley put up some good numbers. Like it's, I've heard the general consensus. I didn't look at it today, but I was hearing that most companies were coming through positive for earnings. Right, so it was like on average, it was like in line with historical averages, which is surprising.
I'll send you something, positioning scorecard for earnings, so you could see where sentiment lies. Netflix, every asset manager was max long. It had a 9 out of 10 position setting on the scorecard.
Very interesting.
We'll see.
I'm a big Netflix user, so they got my vote.
They got you right.
Yeah, man. All right, boys, let's end it there, right? I appreciate you, and have a good week. Talk to you guys next week.
See you next week.
All right. See you, boys.